Hi, and welcome to another edition of BigTrends.com's free indicator classes. Today we're going to take a look at another one of my favorite indicators, DMI, Directional Movement Index. And of course we're still using the Trixie charts, which is available on BigTrends.com for free. And you can, let's see here, what we'll first do is add the Directional Movement Index, and then we're going to walk through exactly what it does and how you can use it in your trading. So I go over here and click on Settings, and then I'm going to scroll down to the D's, of course, which stands for Directional Movement Index, and the Directional Movement Indicator. The parameters here are 14 bars. That's what we're going to keep it for. That is the traditional setting, and it is typically what works the best. It is what we use. Okay, so now we can close off the setting side and take a look here at the bottom of the screen. We're going to take a look at ADX today. ADX is, of course, a gold miner, Barrick Gold. I'll tell you basically what this indicator is telling you. First off, the purpose of the directional movement indicator or index is to tell you if a instrument, stock, or ETF or Forex, any type of pair, is trading or trending. And it also tells you how hard it's trending or how strong the trend is. So let's take a little bit of a step back here. And we're actually going to take a look at the weekly chart. So if you were buying this particular stock and you were looking for a $10 to $12 move, fairly large move on this particular stock, you could look at a weekly chart, a little bit of a longer term. So when would you get into this particular stock? Well, you would take a look at, let's say, the DMI or the positive DMI. The positive DMI is what? It tells you how strong the bullish trend is. What does the negative DI do? It tells you how strong the bearish trend is. So when the positive DMI is above the negative DMI, it tells you that there is a bullish trend that is stronger than a bearish trend. So people typically trade the crosses in this particular index. The crosses, when DMI positive crosses above DMI minus, that's a bullish trigger. Conversely, when DMI minus crosses above DMI positive, that's a bearish signal. So what signals do you trade? Do you trade every single cross? No. Traditionally, what people are going to be looking for, not only crosses, but what's your filter? Let's look back here. When do you get in? Well, take a look at ADX. ADX in this particular instance is here at the lower portion of the screen is the blue. All of these are using the 14 bar setting. Now, ADX tells you how strong whatever prevailing trend is. So, even if it's a bearish trend or a bullish trend, ADX will be trending higher if whatever that prevailing trend is strong. What's the key level to watch on ADX? 25. Typically you want to see ADX above 25. You also want to see it trending higher. It can be trending higher once again in a bearish or a bullish trend. It just tells you how strong the prevailing trend is. So you can see here the red line, which is positive DMI, is above the green, which is negative, which tells you what? That up above here there is a bullish trend. Now how strong is that bullish trend? Well, guess when it becomes the strongest? When ADX starts trending higher, right? So that's what you'll be looking for with ADX and DMI. Hope you enjoyed this very quick rundown of the Directional Movement Index created by Wells Wilder, as well as the ADX, which is a complementary indicator with that, which stands for the Average Directional Index. Thanks, and have a great trading day.